Hi, welcome to the YouTube channel, Marc Cuniberti, and I am Marc Cuniberti, host of Money Matters and financial columnist for half a dozen newspapers. Your Corona and market update. Been about a week since I did an update, but the Dow had a huge day today. It was up close to 900 points, which puts it at 24,500. The low on the Dow was 18,300 and something, the recent low. And of course, the high that was made February was 29,000, about 500. So we're down somewhere in the area of 5,000 points from the high, but at 18,300, the low, we were down close to 11,000 points. The NASDAQ is within spitting distance of an all new high, so you have to wonder what is going on. Let's cover the coronavirus first. 4,800,000 cases worldwide, 319,000 deaths. That's about 7% mortality rate, people that are dying of the people that we've tested. In the United States, 1,546,000 cases with 91,000 fatalities. That puts it about a 6% rate, again, of the people that we've tested. 213 countries are affected. The states are opening up sporadically. They're looking at a variety of metrics to open up. We're seeing some states fully open, some partially open. The state here in California, my state, my home state, is opening partially. So there's all sorts of different cross currents and currents going on with this virus. And we're looking at some of the states that opened up early. We're looking at Georgia especially closely to see if they've got a spike in new cases. And so far, CNBC reports that really hasn't happened yet. So that may be some good news. Some of the things that is transpiring with the virus, President Trump said he is taking hydroxychloroquine, go believe it, the anti-malarial drug. So that's kind of a surprise, says he's been taking that for over a week. We had a potential vaccine from the company Moderna, and that is showing promising results in early trials. I think that and the fact that the Fed chief, Jerome Powell, spoke on CNBC 60 Minutes yesterday, Sunday, the 17th of may have had something to do with this tremendous spike in the market that we saw today. Interestingly enough, some of the stocks that have been moving, the internet stocks and the stay-at-home video stocks, such as Zoom and Zscaler and all the rest that have been going up, kind of backed off today. So we saw some movement in airlines, some movement in cruise ships, banks, and pretty broad-based rally. But some of the stocks that we didn't see move or actually fell were some of these internet providing stocks at this stay-at-home economy. On some side note, a person who later tested positive for COVID-19 attended a church service on Mother's Day that exposed 180 attendees. This is the polarization of the side of people that want to open up because of the economy and those that think if we open up too soon, we're going to have a lot of reinfections. So we have to really keep an eye on the states that are opening up more so than other states to see if we're actually going to be seeing this tremendous second wave that they saw in Sapporo. Now in Japan, the island of Sapporo, in the city of Sapporo, they had shut down for about 3 weeks, and then they opened up again. That was on the island of Hokkaido, where they're located, and they saw a tremendous second wave. And so we've been warned that maybe a second wave, and then Hokkaido, Sapporo had to shut down again. Some of the disturbing videos and images that we've seen on the news is that beaches are packed and some people are gathering in restaurants and bars like nothing has really happened. So that is concerning. Again, with this reopening, we're really going to get a clue on whether we're going to see a second wave or not. I would imagine within 2-3 weeks, if the cases start to spike again, then that could be serious for sure. The stock market is really surprising to a lot of people, and it is to me. I originally thought that when we went from 29,500 to 18,300 and then spiked up into the 20,400 range, 23,000, 24,000, that we would see a retest to 18,300. But with all the federal stimulus programs that are coming out, I mean trillions and trillions of dollars, much more than we saw in '08 or '09, it's hard for me to now believe we will see a retest. When you see that much money going into the economy, it's some of it's going to find its way into the stock market. I don't think we're going to see a retest into the 18,300 level, at least in the short and medium term, maybe sometime way in the future, but I don't see it coming now. But for this to be a V-shaped recovery where it went from 29,000 to 18,000 and right back up to 29,000, still have a hard time believing that's going to be true. We actually did some selling in first week of March, which protected a lot of the portfolios. Then we started buying the third week of March, which gave us some good potential gains. And now we're almost neutral again. We're waiting to see what happens. I will tell you, with the Dow sitting where it is right now, it's right at the channel where we're at top of bouncing at the major rebound. So the Dow fell hard, came back, and we're right at that top level. So it's going to have to do some work to break through a little bit higher, or it could bounce at this 24,500 level and then start back down again. So we really don't know. I would say be careful. Everybody was in today, and the stock market is like that. Everybody in, everybody out. So we're just going to have to keep an eye on this. The lows in oil have been reached. Oil is now back on its way up. And gold is reacting rather healthy. Didn't do much today, but was up. And that's probably in regards to all the money that the Federal Reserve is printing for all these stimulus programs. Some of the other economic news is J.C. Penney has filed for bankruptcy. We're going to see more bankruptcies, some that the names that you recognize and some that you don't. And you're going to see surcharge on your receipts, COVID-19 surcharges that are going to be little amounts on certain restaurants and bars and other things that are going to get a little small tax that's going to be listed as a separate item to help pay for the workers and some of the setbacks that they've seen because of the shutdowns. So don't be surprised about that. Obviously, we're all Zoom experts now. I'm actually not, but I'm still using Skype. But there are Zoom experts now. Zoom has been a very popular media for people conversing, even having dinner parties and the rest. But we're now reading that there are some neck and back experts that are warning that all of us sitting home is causing more neck and back aches. Kind of a strange little result of us being at home. And I can tell you, a lot of people are getting very used to being at home. So for all of us to go back to work, I will tell you that Twitter has told its 5,000 employees they don't have to come back to work. Most of them can continue to work at home. So this environment, for the working environment, has definitely changed. We're going to see some companies that can't make it and go under, and some companies are going to thrive in this environment. So I think this is going to be changing completely how we view our workspace, our work environment, what's necessary. I can tell you, in my opinion, there's going to be a lot of commercial vacancies, and even those that aren't vacant, companies that will not move out, will be negotiating their leases down because of the tremendous glut in supply. So I think the landscape for commercial real estate has changed, and I myself would probably stay away from commercial real estate as a landlord for now and for the medium-term future as well. We're seeing some of the airline and cruise stocks rise today, as well as the banking stocks. Walt Disney Company has said they have plans to open up their Florida park. Their park overseas in Asia now is open, and so we're seeing limited opening there. And we're just going to have to see. One of the recommendations on CNBC was to buy one of the amusement park stocks, so we'll see how that goes. So that does it for today's edition of your market commentary and Corona update. The channel is Marc Cuniberti. The website is moneymanagementradio.com, where everything is free, no charge there. And you can send me an email at news@moneymanagementradio.com. I'll try to be back tomorrow with more market update to see if I can follow what the market's going to do after that tremendous run today. My name is Marc Cuniberti. Thanks for watching.